the trading desk of DailyForex.com. This is Christopher Lewis looking at the upcoming April 29th Forex session. In front of you is the Euro US dollar pair, and as you can see, Friday had a positive candle form, although very uneventful. Trading occurred pretty much across most of the Forex markets, with perhaps the one exception being the yen related pairs that sold off. Fairly quiet trading, and as you can see, the 100-day moving average is starting to creep into the picture. We are just below it, and as a result, some of the longer term trend traders will be putting downward pressure on the pair at this moment. However, leaving that aside, we have what looks like consolidation anyway, and as a result, this is a very difficult pair to trade at the moment for anything other than a short-term trade. We obviously have 130 being a focal point as the market continues to gravitate towards 130, and as a result, it's very choppy conditions. The pair is essentially headline driven, as it's just a matter of what side of the Atlantic are we focusing on. Are we focusing on Europe's debt problems, which of course have not been fixed, Spanish unemployment at 27+%, Italy's lack of a governing coalition still, or are we looking over at the United States with a weakening economy, although it is positive, and the Federal Reserve seemingly unwilling to end quantitative easing and the continual threat of currency printing? With that being the case, it does look like we are going to stay within this box in the near term. Even though we had formed a shooting star, which was very bearish on Thursday, it was Wednesday that we formed the hammer that counteracted that. That normally shows consolidation and confusion as we await some type of catalyst. Friday sees the non-farm payroll number come out. That could be the catalyst, but quite frankly, we are heading we are getting very close to the month of May, which of course is traditionally a very quiet month as traders head for vacation, and generally only junior traders are staffing the trading desk in Europe and North America. With that being the case, we could be carving out the range right now, and as a result, I have no interest in trading this pair until we break down below the 129, possibly 128 level, or breaking out above the 132. Until then, for my liking, it is much too choppy, and it's going to be difficult to discern any type of tradable signals for anything more than a handful of pips.